Depending on your situation, navigating the housing market can be very, very challenging. Here to make more sense of that is our special guest, Marshall Clay with the Welch Group. We were just talking earlier about the housing market, and there could be some headwinds, particularly for those people who may be incurring a lot of credit card debt.
Yes, absolutely. And I think what we've seen over the last 2 to 3 years is we've seen an exponential increase in the price of homes. And I think now you've got these really high prices colliding head on with these really, really high interest rates. So you've seen a housing market that's really paralyzed. And I've kind of seen anecdotally some things. I've had a lot of questions from folks who've ratcheted up a lot of credit card debt. And now they're tapping into those home equity lines of credit in order to pay off that credit card debt, which is a smart decision, by the way. But it's one step before, maybe having to take a more drastic measure, potentially selling a house. So I'm not trying to scare people, but I just want people, as they're entering the housing market today, to understand kind of what they're getting into and the risk. And so what I tell folks is, look, if you're looking to enter the housing market now, you need to have a specific need, right? If you need to be in a certain neighborhood for schools, for your family, you need to be close to family members, close to a certain area for a job, that's a good reason to be looking for a house. The second thing you want to do is, and this is a little bit hard to assess, is assess your job security, right? And if you can ask, bosses or ask colleagues or whatever, just try to assess as best you can how secure your job is. That'll give you that confidence to potentially enter the house.
And I know that's always a variable you always have to consider, but there's a lot of uncertainty about jobs in the coming economic markets in the next quarters or two.
That's right. And the last thing I want people to do is taking this leap and taking on this big investment, and then something happen with their job and be forced to sell maybe in an unfavorable market.
And because of where prices are right now and the high interest rates, people may be biting off more than they can chew.
That's right, and that's why you need to make sure that your cash flow, the money that you have coming in on a monthly basis, can carry that note, whatever that note may be. And I'll just say this, that lenders will lend you more money than you can afford to borrow.
So the percentage they need to look for is?
Yeah, I would say around 25% of your net income. There's a lot of literature out there. Some people would say 28, 30% of your gross. I would say give yourself a little bit of wiggle room. Make sure it's 25% of your net take-home pay.
All right, what do you mean by low risk of potential move?
Well, so I think a lot of people take on jobs that may cause them to have to move in the short term. Some people go to school in certain areas and they think, hey, look, instead of renting, I'm going to buy a house, and then 2 years later, I'm going to look to sell that when I move. I think that's a very risky proposition in this environment. I think we could see prices come down. Something's going to have to give in this housing market, and I think there's a lot written about rising wages versus prices coming down. I think it's far more likely that we see prices come down versus wages and salaries rising to meet these new home prices.
All right, Marshall Clay from the Welch Group. Just some things to think about there if you're going to be hitting that housing market. Appreciate it.
You're welcome.
All right, we'll be back.